Welcome traders, hope everyone's well. This is a follow-up video for the OrderFlow live trade examples that we carried out. In this video we're going to cover the absorption and sweeps that you look to see on the DOM and on the chart in specific levels that you're looking to pay attention to and take action. So if this is the first time that you're on the channel, we're going to run through quickly what you're seeing on the charts, okay? Now bear in mind this is a recording from the 16th of May PM session. Okay, so up the top left we have a Heikin-Ashi chart. The Heikin-Ashi is just simply to remove some of the noise from traditional candlesticks. Okay, the bottom we have delta, which essentially measures the difference between aggressive buyers and aggressive sellers. We have market profile to understand context of the day, of where the market spent the most time. Okay, and then we have the 4 DOMs. Now the DOMs are extremely important for order flow. If you don't have them configured correctly, there's a link in the description to explain more about how to configure the DOM, how to set it up, and so you've got something similar to what you're seeing in this video. Okay, so we have ES, which is the main product that I trade. The order flow is easier to spot, it's a thicker market, and it's nicer to analyze. And then we have its wild brother NQ on the right, which is probably 5 times more volatile than ES. And then we have the other equities. We have the Russell and we have the Dow. Now correlations are extremely important. We're going to cover that in a separate video on how important correlations are and ultimately what you need to be looking for a catalyst of a painless trade. So watch out for the future segments for that. Okay. So in this video we're going to cover 2 main things. Okay, we're going to cover the sweep of a level and why I'm drawing out these rectangles for where I'm looking to pay attention and see exactly what is happening at the market. Okay, now the reason for these levels are drawn out, okay, this is essentially going to be at high and lows of the day, key inflection points in the market such as overnight high, overnight low, where likely stops are going to be, because the market loves to go to areas where a lot of people are going to be invalidated in the trades, and the reason why they do that is so that they can ultimately get filled on their positions. Okay, so in the first segment of this we're going to look at the sweep down into this level. Okay, and then we're going to look at the order flow that comes in around that. Now we have MBO data which essentially shows you at each price which size is sitting in one clip, so you can see the 50 lots showing here. Okay, now when the market comes down into this level, okay, which is the low of the day, you can see that here in market profile. The low of the day was set in J period. The market typically, the first time it comes into the level, okay, you're normally going to see the market tick up off that when it first hits the level. It's actually even more prevalent if it hits it into the level aggressively. Okay, when it's been this far away and it's had quite a reaction off of that level, the first time it hits it, it'll normally then tick up the guts of 8 to 10 ticks. Okay, so we'll jump into this now. Okay, so at the moment we can see NQ is the one that's going to be leading here. It's currently aggressively hitting into the bid. Okay, now excuse the two mice that we've got running here, because this is a recording from a live session. So we see this aggressively then hit into this level, notice here, and we instantly see the market then tick back up. Okay, now I'm going to pause this and run through. So the market is, if you notice, aggressively hitting to the level. Okay, all markets tick down at the same time. Okay, we have the Russell and the Dow hit. Now NQ's already pulled off, so this is your first aggressive entry that you can always take. This is what I was discussing. The first time the market aggressively hits into this level, we see delta. A lot of negative deltas come in there. However, we've seen stops been triggered. When you see the market blip through there, that's when stops have been actioned. Now we don't know that, but the market gives away its exact signs because stops are kept broker side. Okay, they're not prevalent. Sorry, they're not visible on the DOM. Okay, you can't actually get to see that, but you can tell by the reaction of how the flow comes in when it blips through prices like that. Is typically when stops have been triggered. Okay, so with the market's hit into that level, we've seen a tick up, and then we can see on the DOM that there's been the guts of 800 contracts or so instantly absorbed on the bid. Okay, so if you were looking to get in, your first aggressive entry would be a couple of ticks below this low. Okay, so your first entry would be in here at 23 evens. Okay, for you looking to get aggressive. The market again then bids up off the level. We can see NQ in the middle is ripping. Okay, and when NQ rises like this, it will tick up the rest of the market, which is doing. Now your first session, your first target for this specific trade, okay, is going to be, you need to be out quick. That you're not going to take the full home run here or anything along those lines. Typically try and get out for 8 to 10 ticks if you're taking a more aggressive entry. Okay, so the market gives you that very clearly. You're probably in this trade for 30 seconds. Okay, now that could be you done for the day. You can only need your 20 ticks for the day. You know, 2 of these trades a day, and that's you done. Okay, now this is where you're going to be then paying attention of what is the next step in the market. Are we going to continually pull the offer, or are we going to go back down and then fill out this area? Okay, so we'll skip this forward a little bit for you just to see. Okay, so the market is then came back down into this level. Okay, and we'll notice the amount of absorption that's happened. So down at this level, we have just seen 2,400 contracts, 808 contracts, 973 contracts that have been executed. You can see them aggregating here. All of that aggressive selling that is hit into the bid, but the buyers have then just absorbed. Okay, if you didn't get your first entry, now is your time where you need to be thinking, right, this is now a good opportunity. We've seen thousands of contracts traded. The market's just swept the low of the day, and ultimately now we can now look to start getting into this position. Okay, and ultimately you need to be watching what the other markets are doing. We can see that they've been pulling off, which is good. They need to be working in tandem with each other, and there needs to be a couple of key points that need to be happening here, which is you want to see continuous absorption on the bid. Okay, we can see 700 contracts executed there, again absorbed, and NQ is ultimately still aggressively ticking down here, but we're still seeing absorption going on. Notice the amount of contracts that are trading. There's 1133 absorbed now, continuous selling into this level, and it cannot crack. Okay, NQ, and if we notice here that every market is currently doing this. We've seen absorption on NQ, okay, absorption here on the Russell and on the Dow, and we'll just essentially watch this play out. Notice the continual drilling here into the bid, okay, negative 238 delta here, and the market's still not been able to crack. This is the exact type of context that you need to be seeing. There's 700 absorbed again. Okay, now note the offer is still happy to be selling here and absorbing themselves. Large traders are currently involved in these positions right now. We've just seen the buyers try and step in. They've executed 1,046 contracts on the offer. Okay, but that's still been absorbed. Now, for you to see a reaction off this level, okay, whoever is absorbing these prices needs to start pulling. Okay. But again, we've seen tons and tons of absorption. It doesn't get any more than this at these specific levels. In the last couple of minutes, we have seen four, 5,000 contracts absorbed. You know, and essentially how this works and what absorption just truly is you've got a door, okay, and if you continually hit it and it's then not breaking, right, you're eventually going to run out of steam. You can run out of breath in order to continually hitting, you know. And essentially, because buyers are not even been aggressive yet, they're passively absorbing these orders, right? They've not even started hitting into the offer yet. So if you see aggressive buying or selling into a level and it's not cracking, or there's not any movement, okay, ultimately as soon as the other side starts getting aggressive and there's going to be orders pulled, you're going to see a tick up in price. Okay. And you'll notice there the amount of absorption here on NQ. This typically, for this to work, and I keep on saying this, but this is extremely important. And what's extremely important is the absorption across all the other equity markets. NQ is such a thin product. NQ tends to absorb over probably 4 to 5 ticks because it's so thin. We've seen 137 here executed at the bid, 98 executed, 123. Okay, for NQ that's a lot. So someone is willing to absorb those prices in NQ, and then we're seeing the same again here on the Russell and the Dow. Okay. Notice again, 1,300 contracts absorbed at that one price. As soon as the offer is pulled here, you then have your entry. Okay, you can get in here. You've got a super tight stop. This media player, honestly. So your entry is going to be in here. You've got a super tight stop. Your stop can be 1 to 2 ticks below the low. You've got maybe 6, 7 ticks of risk, and ultimately you're going to look to target back into the range. Okay, but order flow is going to be the catalyst to give you the confirmation to take this trade. Okay, 1,300 contracts still absorbed. Okay, notice the offer is still absorbing, but buyers are now starting to step in. They've just executed 1,000 contracts there. Okay, now we're seeing NQ ticking up. Now we're going to fast forward this a little bit for you, where we actually clear the DOM. Okay, right. If you've not seen how to clear this, there'll be a video in the description on how to for your hotkeys to instantly clear this. So this is the last sweep. We've seen all of this absorption, and sellers are still trying to then get an aggressive. We're noticing there's 240 contracts hit into the bid right there. The market is actually ticking up despite sellers being aggressive. Delta's also tapering off, you can see here. Okay. And yet we're seeing the other markets ticking up as well. Now if you remember the initial sweep, the level came aggressively into here. Okay, you could have had your first entry and taken your 10 ticks, and now you've potentially got a second bite at the cherry here. And the key thing about this is eventually once the buyers start stepping in aggressively here, this will go. Because look at this, we've seen 4,260, 2,683, 1,500 contracts. You know, that's 8,000 contracts nearly absorbed at this level, and sellers cannot crack. Now NQ is now ticking up. Okay, now we're seeing buyers trying to engineer and saying, hey, I'm willing to step in with some size here at 60 lots. Okay. And now this is just a matter of you, how much are you gonna take target wise. But notice how NQ bids, and then it pulls the whole market up. You've got a nice little tick up on the whole market. Now this is exactly what you need to be seeing, and this is why I'm going to pause this. This is why certain support and resistance levels hold. Okay, it's not just because, you know, the market's random and this randomly held. You can see by the amount of absorption, there was thousands and thousands of contracts absorbed on the bid here, and the buyers were not even getting aggressive. And notice now you can see delta coming up. The first sign of some positive delta that comes in, the markets might bid. Okay, so ultimately what that means is the offer is now starting to be slightly pulled, which is a great sign if you were long in this position. Now there's a part in this video that I wanted to cover where there's aggressive size that hits in the market across all equities, and it just goes from there. And you'll notice when it comes in. Okay. Now the other thing you want to be seeing here, for this market to be aggressively hitting up, you can see obviously Mr. Volatile NQ, that is the one that ticks up the market. Other ones tend to be slower. The conditions for you here, if you hadn't yet entered, okay, you've now increased your risk a little bit by the low, but ultimately price should not be returning back to this low after you've seen all this absorption. The market's already traded out, sellers have already tried everything to crack this level, okay? And the context of what you want to be seeing is you want to be seeing buyers aggressively trying to lift into the offer, okay? And when they tick up in the next price, you want to be seeing them refreshing and adding onto the next price. So you want to see buying, taking out a price, price ticks up, right? Aggressively reload and add onto the next side, and then this always moves very quickly if the offer, for example, where orders are pulled. Another thing you should be watching here is there's 124 contracts and 146. Not one of these contracts in this whole column here is greater than 50 contracts. So what you'll find a lot of the time, if buyers start getting aggressive, these orders here can be pulled. So actually there's not 124 here. These are algorithms and market makers that are ultimately stacking price for queue positions. They can pull. So if we'll watch that and see how that plays out. So we're seeing the absorption that we've just seen there, and it's ticking up. You want to see continual reloading. Okay, market's then ticking up, and due to the low VIX, you'll always see price ticking down a few times. Don't be discouraged by that. It's never going to be as smooth as a second, we'll just skip this forward. It's never going to be as smooth as straight up, okay? But notice this is now where it's happening, okay? You're seeing continual buying, coming in, market ticks down a few, okay, and when it cracks these levels is when it's going to go, okay. But this has been a great trade. This is you now out for 15 ticks. Okay, now I hope with this comes in here, you just see the aggressive buying that comes in. You want to see orders being pulled, okay. Now notice that there. You want to rewind that a little bit. There was 100 odd contracts that were then here, only 56 traded, that was pulled. The market's just skipped four ticks instantly. This is the prime example of what you need to be looking at. This trade is now done. If you got in here and you had 6 ticks of risk, you've just now taken 15 to 20 ticks on this specific trade. Okay, but the correlations are extremely important. You want to be seeing these markets moving at the same time, and you want them all to be flowing together. Okay, now I hope this is providing you value. I document this every day in my live stream where we discuss these levels, and you want to be looking at key inflection points in the market where swing points are. Okay, and that is always going to be at your overnight high, your overnight low, your previous day high, and your previous day low, coupled with some weekly and monthly high levels. You know, you're always going to see people have stops there, and you're going to see large traders get involved at those areas. And ultimately, if you see one side of the market willing to absorb tons of orders, when the aggressive side at that time runs out of steam, you can get in with a very tight stop, you know, and you're invalidated if it breaks the low. This trade was clear as day, you know, where you're ultimately you're invalidated below this low, and then ultimately you're just waiting to see price then tick up and wait for correlations to come out. Okay, so I hope this is providing you some value, and it gives you some context for what you're actually looking at and some key levels to draw out. Okay, I'm not some sort of mythical genius where I can draw rectangles and see where price is ultimately going to stop and there's going to be congestion. Okay, I've looked at these charts long enough where the market does this all the time, especially when it's in balance. But confirming the levels is where your order flow and DOM comes in. Okay, when you couple correlations, delta, and the key points of where the market is looking to conduct a lot of business, you've then got a recipe for a very high probability position. Okay, so I'm going to leave some links in the description for the other videos. I'll leave a link to the first segment in the series, which is you're seeing some large size coming in and more addition to sweeps. Okay, the next part we're going to cover is more than likely some icebergs, and we're going to put everything together in context with how I look to execute. Okay, now I'd really appreciate if you can like and subscribe, do all the YouTube things for me, please. There's links in the description to buy me a coffee. If you would like to do that, that would be greatly appreciated, as it keeps me motivated to continue to put out this content. Okay, so please make sure and leave any questions that you've got, and I'll see you in the next video. Okay, peace.